Stocks closing higher today, best session since the day after the election, but still lower for the week and the month as tariff fears and growth slowdown concerns weigh on investors. Joining me now is Rebecca Patterson. She's a senior fellow at the Council on Foreign Relations and former chief strategist at Bridgewater. Rebecca, good to see you. So,
you too, John.
What's the lesson from gold's climb to 3,000?
So gold is an asset that a lot of people get confused by, but I can break it down very simply. It does best at the tails. One tail is when we have rising high inflation, especially faster than expected, and the other tail is recessionary fear or crisis fear. I think right now you've got a little bit of both. You certainly have uncertainty that growth could slow, and as we saw in the latest consumer sentiment report, inflation expectations are rising, I think, a lot faster than people might have expected.
So how long does it last?
Oof. Well, you tell me where Trump is going with tariffs, and I'll tell you how long it lasts.
Okay.
I think the bias of risk is that we are going to see more tariffs come early April. I think the administration has been pretty clear that's where it's going. And I would guess, and this is a guess, that President Trump is going to continue to do a bit of a dance with them as negotiations play out. And that is going to keep uncertainty elevated and inflation expectations elevated. So in my mind, gold probably still has some room on the upside even after reaching today's record level.
Well, we know he's not afraid to dance. Well, give me a read on the risk reward in investing in Europe here, given Germany's moves toward taking on more debt and the tension with President Trump.
Europe's decision to relax its fiscal straitjacket, to spend more on defense and infrastructure, this is really a historic moment. And I don't think it would have come without the United States backing away from Ukraine and moving forward on more tariffs. Longer term, there is going to be government capital supporting these sectors. So I do think there's a long-term investment there. In the very short term, though, we have seen 12-month forward price earnings ratios for Europe now above historic averages, and we know we're getting tariffs in a few weeks on Europe. So for a tactical investor, I might be waiting for a better level to get in on some of these sectors. But taking a longer term structural view, I think having global defense and infrastructure exposure in my portfolio, whether it's Europe or more broad global, I think that's going to make a lot of sense. The money is going to keep flowing for a while.
Speaking of money, what about the currency impact, including the ruble?
Yeah, so I put this in my notes to you earlier today. I was just looking to see how much the dollar's moved year to date, and it jumped out to me anyway that one of the best performing currencies in the world year to date has been the Russian ruble. And I have to assume that's because no one owned it anymore, and now we have the possibility of some easing of sanctions if we have a resolution with the war in Ukraine. It's a question to me how much U.S. and Western businesses are going to be excited about doing business again in Russia in a serious way. President Trump is meeting with oil executives next week. I would guess Gazprom and other initiatives may come up in that. But needless to say, it just shows you when things get extremely overbought or oversold, it just takes a little catalyst to get a big reaction.
So maybe that's a trade, but it sounds like you'd be careful with that.
Oh, gosh, yes. I mean, if you think about assets being seized, businesses being seized, how quickly the spigot was turned off when it came to Russia, I would think there are probably better risk reward investment ideas out there than going down that particular path. I think today, frankly, is a time where you're probably not taking that much risk. You're looking to be fairly defensive given the uncertainty out there. So in terms of markets overseas, the UK, Switzerland tend to have fairly low betas. They're not as volatile as the US, let's say, and more defensive indices. So if you wanted overseas exposure, and in the US, I still like tech structurally. I think a lot of the profit taking that we've seen over the last several weeks has brought valuations down into a more attractive area. Not cheap, but certainly more fairly valued. And longer term, it's just a matter of when we get to generalized artificial intelligence, AGI, and that's going to be another Chat GPT moment, I think.